Hello, my name is Delzin Elisha, not Johnson O. My student ID is 2025135863.
Hello, my name is Dilrosan Alim. My student ID is 2025904329.
Hello, my name is Siti Atira binti Yusuf and my student ID is 2025108609.
Hi, my name is Liana Elia Analideo. I'm from AC2204B and my matrix number is 2025124641.
I'm Siti Atira binti Yusuf and I will be presenting question 1 and 2 for part A. So for the first question, explain briefly on Mfrs 8. Mfrs 8 or operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses. Its operating results are regularly reviewed by the Chief Operating Decision Maker, or known as CODM, to make decisions about the allocation of resources and to assess its performance, and for which discrete financial information is available. The purpose of this standard is to set out guidelines on how entities should report information about operating segment in annual financial statements and interim financial reports. This information is important to understand entity's past performance, assess its risks and returns, and make informed judgment. Next, an entity must disclose information that allows users of the financial statements to evaluate its business activities and the economic environments where it operates. For the measurement, the amount of each segment item reported shall be based on the measure used by the CODM. For example, if the CODM measures segment performance using profit after tax, then segment profit after tax will be reported in the financial statements. However, if more than one measure is used, the measure that is most consistent with the financial statements shall be reported. Moving on to question 2, provide 2 examples of CODM from publicly listed Malaysian companies. Under Mfrs 8, the CODM may vary depending on how a company is managed. The first company is Petronas Chemicals Group Berhad. The CODM is Mazuin Ismail, who is the managing director and CEO of the company. He is responsible for reviewing the internal management reports, which are measured based on segment profit after tax to allocate resources and assess performance. The second company is Powerroot Berhad, and the CODM is Wong Tak Yong. Serving as the CEO of the company, his responsibilities include reviewing the group's operations quarterly, covering manufacturing and marketing entities in Malaysia and marketing entities in the Middle East, China and Hong Kong based on segment profit before tax.
Hi, I'm Delzin Elisha and I will be presenting question 3 for part A. Financial reporting standards such as Mfrs 8 typically require companies to report information about their operating segments. There are 2 types of segmental report, which is operating segment and geographical segment. For operating segment, we use Petronas Chemicals Group Berhad as the example. A snippet from the 2024 financial report of Petronas Chemicals Group Berhad is, as at 31st December 2024, the group reportable segments comprise olefins and derivatives, fertilizers and methanol, specialties and others. The strategic business units offer different products and services and are managed separately because they require different technology and marketing strategies. As for geographical segment, we use Powerroot Berhad as the example. It is stated that the group has 2 reportable segments distinguished by Malaysia's entities and overseas entities, which form the main basis of how the Chief Operating Decision Maker reviews the group's operation on a quarterly basis. Malaysia entities include the manufacturing and marketing companies in Malaysia, while the overseas entities include the marketing companies in Middle East, China and Hong Kong.
Hello, my name is Dilrosan Alim, and now I'm going to talk about the last question from part A, 2 key benefits of segmental reporting. Mfrs 8 operating segments was introduced to improve transparency and comparability in financial statements. It requires companies to disclose information that helps users understand the nature and financial effect of their different business activities and the economic environments in which they operate. By dividing the business into distinct segments, such as operating and geographical segments, investor can evaluate which parts of the company are performing well, which areas face risks, and how management allocates resources. For this part, we will use Petronas Chemicals Group Berhad PCG, one of the Malaysia's leading integrated chemical producers, as our example. Firstly, let's dive into the geographical segments. The geographical segments presents financial information based on where the company earns its revenue or incur expenses. This is crucial for multinational companies like Petronas Chemicals, which operates across several regions and sell products to both domestic and international markets. In the Petronas Chemical Annual Report 2024, the company presents its revenue by geographical areas, primarily divided into Malaysia and outside Malaysia. For instance, revenue from Malaysia reflects local demands for chemicals, fertilizer and industrial products, while outside Malaysia represent exports to the Asia Pacific, Europe and Middle East markets. This breakdown provides valuable insights for users of financial statements. It enables investors to analyze the company's dependency on certain region and to assess how external factors such as currency fluctuation, political condition, and trade regulation might affect performance. It also helps management and analysis identify potential growth markets or regions requiring better risk management strategies. geographical segments, reporting enhances users' understanding of how different markets contribute to overall revenue and profit. It provides a clear picture of the company's geographical exposure, market diversity, and regional profitability, allowing investors to make more informed investment decisions. Next, the operating segment focuses on the company's internal structure, dividing financial information according to the types of products and services offered. This allows users to see which division are the main contributors to the profitability and how efficiently each business line operates. Petronas Chemical Group identifies its operating segment as olefins and derivatives, fertilizer and methanol, and others, which include basic chemical and trading activities. In the 2024 annual report, the olefins and derivatives segments record the highest revenue contribution, while fertilizer and methanol generated strong profit due to the high global fertilizer demand. This type of disclosure allows financial statement users to evaluate how each segment contributes to the company's total performance. It highlights which business areas are the most successful, how external market conditions affect them differently, and how the company manages its operations strategically. In summary, operating segment reporting improves users' ability to assess the performance and profitability of each business division. It provides detailed information on risks and return profiles, support management accountability, and enhance strategic decision-making for investor and analysts. Hello, my name is Rosan Alim, and now I'm going to present question 1, part B, which I'm going to explain briefly on Mfrs 134. Mfrs 134, Interim Financial Reporting, sets out the requirement for preparing and presenting financial information for a period shorter than a full financial year, usually quarterly or semi-annually. Its objective is to ensure that investor, creditors, and regulators receive timely and reliable financial updates between annual reporting periods. This enhances the understanding of a company's earning capacity, cash flow, and financial position throughout the year. Recognition in interim reporting follows the same accounting principles as annual financial statements. Transactions and events are recognized when they meet the definition of assets, liabilities, income, and expenses in the conceptual framework, not merely when cash is received or paid. For example, Petronas Chemicals would recognize revenue when goods are delivered or services are rendered, even if payment is collected in the next quarter. This ensures consistency, reliability, and fair presentation of financial results across reporting period. For classification, under Mfrs 134, items must be classified in the same way as in the latest annual financial statements. This includes the classification of assets and liability as current or non-current, and income and expenses as operating or non-operating. Consistency in classification helps users compare interim and annual results meaningfully. For example, inventory remains classified as a current asset even during interim periods because it is expected to be realized within the normal operating cycle. Next, for identification, every interim financial report must clearly identify key information such as the name of the entity, the reporting period covered, and whether the report is for individual or consolidated financial statement. This ensures that users can easily trace which company and period the report refers to, maintaining clarity and reliability in communication. Furthermore, for measurement, Mfrs 134 adopts a year-to-date measurement basis. This means that each interim period's results include transactions from the beginning of the financial year up to that date. Estimates are used more frequently in interim reports because they must be prepared quickly. For example, Petronas Chemical may estimate depreciation or inventory valuation using methods consistent with the annual report. The emphasis is on timeliness rather than absolute precision, ensuring users receive relevant information promptly. And lastly, for disclosure, interim reports should focus on significant events and changes since the last annual reporting period. This includes seasonal or clinical revenue patterns, changes in accounting policies, major acquisition or disposals, and contingent liabilities or commitments. However, companies are not required to repeat all disclosure from the annual reports, only updates that provide insight into recent developments.
As for question 2, the first significant event and transaction that affect an entity's financial position and performance is declaration and payment of interim dividend. It is stated that on 17 March 2025, the bank paid a single-tier interim dividend of 2.5 cents per ordinary share amounting to 161,570,661 in respect of the financial year ended 31st December 2024. The effect on financial position is it has reduced the bank's retained earning and total equity for the period ended 31st March 2025 and also reduced the bank's cash position due to the cash outflow. As for financial performance, it reflects the distribution of earnings to shareholders and may indicate the bank's confidence in maintaining profitability and capital strength. Second event and transaction is changes in income, impairment levels, and operating expenses. It is stated that total income derived from investment decreased by 3.7% and 8.8%, mainly due to lower profit income for financing and advances. Impairment allowance for the quarter was 28.3 million, contributed by additional provisioning for retail portfolios. Operating expenses increased primarily due to personal expenses and establishment-related costs. The effect on financial position is it increased impairment allowance, reduced total asset and retained earning, reflecting more conservative credit risk management, and it also caused higher operating expenses which affected liquidity and cash flow. The effect on financial performance is the combined effect of lower total income and higher operating expenses and impairment allowance resulted in a decrease in net profit for quarter 1 year 2025 compared to quarter 1 year 2024. The profit decreased to 73.1 million to 56.7 million.
I'm Liana and I'm going to present the Part B Question 3 Interim Reporting Period of MBSB Bank. These are the unaudited statement of financial position as at 31st March 2025, unaudited statements of profit or loss and other comprehensive income for the first quarter ended 31st March 2025, unaudited statements of changes in equity for the first quarter ended 31st March 2025, and the unaudited statements of cash flows for the first quarter ended 31st March 2025. This is the interim reporting period of MBSB Bank. For statement of financial position, the current interim period is as at 31st March 2025. The comparative interim period is as at 31st December 2024. For statement of profit or loss and other comprehensive income, the current interim period is for the 3 months ended 31st March 2025, and the comparative interim period is for the 3 months ended 31st March 2024. For statement of changes in equity, the current interim period is for the first quarter ended 31st March 2025, and the comparative interim period is for the first quarter ended 31st March 2024. And lastly, the statement of cash flows, the current interim period is for the 3 months ended 31st March 2025, and comparative interim period is for the 3 months ended 31st March 2024.